Well, welcome. I'm excited to dive in with you this month with the Freight Market Report from Trax. Excited to have you here, Steve, and be talking through kind of all the things that we are. Well, there's a lot of ground to cover, obviously, this month and everything that we've been kind of talking about offline and all the things that are transpiring geopolitically across the supply chain, across the freight market. So thanks for being here. Thanks for chatting with us. Give us a little just quick intro on who you are if we have new watchers and listeners, and then we'll kind of dive into the numbers. What we saw.
Sure. Well, good morning, and glad to be here and talk about all the interesting things happening in the market. Steve Beta, Executive Vice President of Customer Advisory for Trax. I oversee a lot of our customer programs, have a lot of conversations with customers about how to navigate the disruptive events that are occurring within supply chain and certainly within transportation logistics as well. So I bring you today some fresh input that I've heard recently from being in some of those customer meetings and looking at the market, reading the tea leaves, and getting off a very long and arduous flight in the last few days. That I wish we had weather control systems because if I'm a little sleepy today, it's because I didn't get much sleep over the last few days, but. Excited to be here. So the excitement will override the sleepiness from
there. You go. Right. Well, we'll take what we can get. You in any form obviously has plenty to offer. So we're excited to dive into this. Just to kind of give all of our listeners context, every month we put out a pretty comprehensive report, freight market report is what we call it, published by Trax, commented and curated by Steve, just kind of going through all the big data points and insights and intel from the previous month, things like the logistics manager index and everything from fuel to transportation to warehouse utilization, everything that kind of affects anyone who's making decisions for the supply chain. Right. We'll make sure we drop a link to how you can subscribe to that. It's free. You get it in your inbox every month, and it's got Steve's insights and kind of interpretations of the data. And so this webinar, we really just kind of unpack the things that we saw, and Steve kind of offers his additional insight and intelligence on it. So there's kind of four big themes I think we saw this month, some of which are continuations of what we saw last month because of, holding patterns that have kind of occurred and things that are out there in the geopolitical space and all of that. And then things that are, a little bit in flux, maybe that are, who knows, right? If they're reactionary or if they're kind of safeguarding against what could or could not happen in terms of just lots and lots of dynamics. So I'm interested to kind of get your perspective on all of it. I would like to start with fuel because I think that fuel has been the hot topic since we did our big Strait of Hormuz webinar, at the very beginning of all of that, kind of talking about how obviously that had a pretty big ripple effect across fuel prices. And so, when we look at the numbers of kind of what's going on right now, I've got the US numbers that we can kind of look at, but obviously this is a very big international dynamic that affects very broadly everything that's happening in the supply chain. So kind of talk us through, what we're seeing in terms of just the ups and downs and all of that. This was obviously pulled from May. So when we look back at April numbers, obviously there's a little bit more trends there, which I can draw from as well if you want me to pull that up. But yeah, so what's kind of your take on where we're at with jet fuel, all the kinds of fuel and how that's affecting things in the supply chain?
Sure. Well, maybe a couple opening remarks. So if our viewers that are regulars were on the last webinar, we had, I believe we had Blake on as a guest, Joy. Blake said something very astute. And what he said was, if the boss answers, why is my cost for transportation up, or a KPI related to it, like cost per unit weight or cost per shipment, up, and you give an answer of how do we mitigate that, and that is sell less, then you would be fired. You remember that comment? So the answer certainly is sell less because you still need to move product. In fact, I was in several meetings where our customers or shippers are very bullish. Actually, we'll talk a little bit about the K-shape winners and losers in the economy, but the answer isn't sell less stuff. The answer is use either mitigation strategies around fuel. Or transportation itself that is a direct relationship to fuel costs. So let's talk about that for a second. So first of all, as I've been mentioning all along, the duration of this is a key factor. If it was a blip, then nobody would have worried about it because most fuel contracts have averages baked in them, meaning that they help you a bit on the upside. They may hurt you a little bit on the downside, but they're there to average out spikes and things that don't have longer durations. Anything with a long duration, it's really hard to mitigate that. Okay, that's not a reality state for most shipping contracts, right? Because they're based on a relative index. So what you're showing here is very common for U.S. as an index produced by the EIA or the Department of Energy that tracks different fuel on a weekly basis, both jet and diesel. And by the way, both are up. Obviously, they're both based on the same principle of the price of oil originating, and then the refining costs are different for the two fuel rates. One's for ground transportation, one for air. But it's all about the duration. There's no relief in sight yet, and so reading the metrics from April, then looking where we are now in May here, May 21st. No relief in sight on these things. So it's not a shortage. It's a supply chain problem. It's a movement of the oil itself. So these things will get resolved. There's some chatter in the market about some changes with OPEC. I read that the United Arab Emirates is separated possibly from the cartel. Those things could happen. That could generate some goodness in the long run for what's been sort of a control on pricing for oil as a commodity. It's traded on a future market, but no end in sight yet. So the only way to make it through here, if you don't want to be fired and say, I'm going to sell less stuff and use less transportation, is again mitigating strategies on fuel and optimizing your transportation itself. So what does that really mean? Well, one is there are alternatives to fuel strategies. Not that you can avoid the increase, but you may be able to buffer the increase a bit by using alternative fuel strategies. So there are non-index strategies out there that allow you to be more granular with the fuel cost as they go up and down, not only generally, but also regionally and very specifically related to a particular route. So if I'm going to the West Coast or I'm going to the East Coast in the U.S., you obviously know, Joy, if you've traveled recently, the fuel costs are very different in the coast versus like in the Midwest. So there are alternative fuel strategies that can be used to do maybe buffer some of those. But again, you can't mitigate it all. I think the second is a factor of consolidation. And so, yeah, that's a great graph there that just shows, I think that it's like 45% is what fuel is up over pre-event. That's pretty significant. Yeah. Okay, that's a pretty significant hit. So really the other strategy is consolidation strategies and things like that. So it's not ship less, maybe it's ship less often, ship in larger quantities. Okay. So when you look at fuel percentages as it relates to modality, you can use better strategies to ship product with a more efficient fuel sort of relative to the transportation. Now that may play into inventory strategies. So when we talk about inventory, it may require me to stock more and order more to get those consolidation impacts to overall modal shifts. So there are ways of mitigating fuel increases, but there's no way to avoid it at this point. And it looks like, unfortunately, it's not a blip. And as of May 21st, we're still in the same place we were in the last webinar. And I don't see a breakthrough yet on the certainly on the Strait of Hormuz, and oil prices remain, very, very high relative to over a 12-month period, right? So
when, and you touched on the fact that this will obviously, in the consolidation strategy, this could be a matter of, could tie into warehousing or inventory or, some of those things.
Right.
And, I would assume that's very much related, obviously, to like the accuracy of forecasting. I know that at the end of this, you're going to be talking a little bit about your data as an asset. And,
yes.
Really it's about what kind of intelligence can you extract from not just the long-term historical performance probably of your supply chain, but even the near term, because you mentioned, okay, so what, we're 2 months, 3 months maybe of kind of a
Right.
track record of this new norm. Is that enough data to be able to forecast accurately, to be able to implement a consolidation strategy like that?
Well, yeah, there's timed lags on everything, right? So the first key is, do you have the data to do the math, right? So what's the math? And I'm a math guy.
I love it when
So
you get nerdy.
yeah, so you have to know, it's not just knowing what your total fuel cost is, it's knowing the math behind alternative fuel options, right? And what's the impact of using that? Then the second is, what's the math behind consolidation strategies, which lengthen transit time, okay, typically, or require more inventory. Then there's the math on the asset of the cost of inventory, right, and storing it longer, and knowing, right, having the right stuff. So I was in meetings this week and talking to some shippers that are expanding their product lines and things. So business isn't stopping. People are consuming things. They're bullish on the growth strategy. They just got to find a better way to do it. So then you hedge a little bit on the inventory. Now that's going to have a longer lasting tail to it, if you will, because then now you have to burn that inventory off. But it all comes down to numbers. Okay, it comes down to math. So if you don't know, nobody knows the end of this fuel. It will go back down eventually, but we don't know. So you use the math, you use short-term sort of mitigation strategies that can self-correct over a longer period of time, and you do the math to see what the trade-offs are. That's really the answer, and you have to have the data to do the math, right? The data is a requirement to do the math. And you should be able to come up with an answer. And if we're really going a step further, AI allows you to get the answer maybe faster than it would have 5 years ago. So now, using tech enablement in the right way, AI becomes an accelerant to be able to perform some of the complexity of the math in a more frequent way. So it used to be good enough that I'd look at these things maybe quarterly or monthly. I think I'd be looking at these things weekly. Now, when you make a decision to order more inventory, that's a lasting decision that will carry for until you burn that inventory down. Of course, that's a decision you have to make, and that may carry forward for a few months. But still, it's all math. It's all math based. The frequency that you need to look at these things is more, and we'll talk a little bit more about this at the end. But I would be, and then AI gives you that accelerant to make those calculations more frequently and recheck your numbers. And then based on the market changes, you revert back to more traditional, optimal way of managing your network, your transportation, and your inventory. Okay.
That's good. That's very practical. I appreciate that. You know, we as we pulled up that graph on kind of the gasoline and fuel prices, that was obviously relevant for consumers as well. And I think that there's absolutely a tie-in. So you talked about product diversification, being bullish on growth. I think that's obviously very healthy and all of that. But there's also absolutely a growing sentiment among consumers directly related to the price of gas, directly related to the price of goods,
Right.
directly related to geopolitical conflict, things like that, is perhaps impacting, some of the potential buying trends, things like that. So we've got the University of Michigan consumer survey, which is what, most institutions are referencing, and got kind of the consumer sentiment. I mean, it doesn't look like it's tanked in terms of just people's overarching opinions of, I mean, maybe year over year it's a little bleak, but compared to last month, it doesn't look like people are too terribly concerned about things. But yeah, just generally, I guess the question less about the specificity of like these numbers in front of us, and more about, as you're talking to Trax customers and thinking about the, bottom up pressure of, consumer demand and consideration about how that affects planning. Yeah. How much does it matter? How much do we need to take that into account? How much does that impact supply chain decisions, inventory decisions, forecasting all that.
Right. Well, what's interesting is there are still winners and losers in the market in general. So if you're in the business of producing technology that enables AI, data centers, anything like that, you're a winner.
Yep.
And fuel's not going to make a bit of difference in that. Okay. So we are in a bit of a K-shaped economy when it comes to that. There are products that are more discretionary for buyers. When the fuel impact that we all see at the pump impact our discretionary income, that's going to impact buying decisions. Put more selling pressure on retailers to have the right stuff, right? To have the right inventory in place and the right deals, if you will. The thing about fuel and duration is it starts finding its way into everything. So now you worry about inflation, not only related to fuel. I think inflation's back up around 3 something in the latest numbers, 3.5. That's telling the Fed to hold interest rates. All kinds of decisions are being made on it. But yeah, definitely fuel has an impact on all of that. But there will be winners and losers here. If you're in certain industries, it's not going to make any difference at all. If you're in others, you have to be really, really careful navigating. And again, duration's everything. If this goes away in a few weeks, everybody becomes happy again. And it's not like wage inflation, Joy, where it's hard to back off. Okay, that's the big thing to think about here. Wage inflation tends to persist. You don't go backwards. You don't usually. You don't say, "Hey, I'm going to give back about 10% of my check and just to do the right thing." That doesn't happen. Fuel, though, once it goes down, will obviously immediately impact overall inflation with energy factored in. So those things have ups and downs, and the relief from that will take place eventually when we resolve the issues and the blockages in the Strait of Hormuz.
Yep.
So that's kind of the way I see that. Okay.
Well said. Yep. Makes good sense. Let's hop over to the LMI. That's obviously a key, data set that we look at every single month. We're quite keen on this. And I also want to look at the new aggregate numbers that you drew our attention to this month, which I think is an interesting one that has been published. So give us a little bit of a sense of what we're looking at here, what the trend may mean, how we should be interpreting this.
Okay. So we came into the end of 25, coming into 26 with capacity concerns. Those have really accelerated, I guess, if you look at graphically, which has caused price increases in transportation logistics. So if you look at the other metrics, they're not changing anywhere near the impact of transportation. So if you look at the LMI, it's a composite index. The reason that graph is showing that steep increase there on the right side, and by the way, just because we're in May 21st right now, that's April numbers. It's not going to. I'm telling you, when we look at May, when we look back and look at May, nothing has resolved anything in the market or in the industry. So my guess is that's going to remain on an upward climb there. So the LMI is heavily impacted by one of the composite index levels, which is transportation, and that's being drastically impacted by capacity and price. Mm-hmm. And if you look at those two graphs and you look at the aggregate cost, that's what's driving the aggregate cost up. You look at the capacity for warehousing, you look at the pricing for inventory, you don't see these huge asymptotic curvatures. Right. And steep increases coming out of these things. They're much more steady. But you look at the pricing for transportation and the capacity. Mm-hmm. I don't think I've ever seen the graphs curve as much as they do in the latest LMI. And again, I don't see anything happening because the challenge is carriers, just like shippers, are trying to become more efficient. Meaning they're going to leverage AI to try to become more efficient, but they're not yet heavily investing in the equipment. That's something you have to do in a planned way. They're all trying to capitalize on margin. So eventually that graph. Yeah. I mean, It does. It takes a very fundamental look at this to say, yeah, prices are really going up dramatically relative to the last. We're showing a 24-month cycle there.
Yeah.
So it is really, really impactful. And then again, if you look at the capacity graph, it'll obviously show the opposite. It'll show a low capacity. Yeah, exactly. It's just a steep fall off,
Yep.
which means that utilization is up. There was a lack of investment in equipment. Capacity has come down. There's other reasons too. The driver shortage. There's a drive to improve margins and efficiencies without adding equipment. All of this is now coming on top of fuel increases, fuel rate increases, which are pass throughs. So, yeah, I don't see anything changing here. So if you're a transportation manager, you are under a tremendous amount of pressure to navigate these increased costs and lack of capacity in the market. Okay, which means you better maintain really good relationships with your carriers because you need them right now. You need your partners to deliver the goods. And you need to find a way to do it at the lowest possible cost. Okay, which means being careful with service selection, carrier selection, avoiding accessorials or surcharges that are unnecessary, finding alternative fuel strategies, and consolidating loads where you can, possibly impacting your inventory management strategy and lowering your transportation costs. Okay. So that's kind of the quick read on it. But I think my point would be looking at this for April and knowing where we are in May. I, again, do not see anything that's happened over the next 4 weeks, and I don't see anything happening in the next several weeks that will make this trend change.
Yeah.
Okay. And it's definitely a trend. It's officially a trend now. Okay.
Not a blip, which we had postulated. Maybe it would just be a blip, but yeah.
No, we definitely talked about it. And here's the aggregate cost. So
yeah,
this
talk
has
me through this.
Yeah, so this is a new part of LMI. I like it because what it does is it looks at primarily cost and adds up the warehouse inventory transportation aspects of it, and provides an aggregate number of a compare across time, right? Which is a really interesting way to look at it. And again, it clearly shows the steep increase there on the right over the last 3 months. And we know that, again, is primarily driven by transportation, more so at this point than inventory or warehousing. Okay.
Makes sense.
So, yep, it's a clear read, and now it's just a matter of what do you do about it, right? What are the mitigating strategies? Because you have to keep selling stuff, right? You have to keep providing service and product to your customer.
Good. All right. I want to shift gears a little bit here. We had, when we talked about the webinar this month, you've been on the road, you've been around talking to Trax customers, and obviously at Trax, we're always innovating, building new product lines and improving and things like that. And one of the biggest things that we do internally as a company is the handling of data, because we have this incredible advantage of having been in the industry for so long and having such an incredibly vast set of data points and information to draw from to be able to inform our product development and all of that. And so I think, you have an interesting perspective on the role of data. Whenever we talk about technological innovation, whenever we talk about artificial intelligence, I think it's an absolute miss to not prioritize the conversation around data and what data can do, should do. There is no AI and there is no agentic, there is no augmentation, there is no automation, there's nothing, right, without really good, clean, standardized, mobilized, activated data. So I'm interested to know, as you've been out on the road, especially in the last few weeks, talking to customers and all of that, I know that you've had some opportunities to kind of dialogue around this idea of data as an asset. I think it would be interesting for you to share with the audience, what conversations you've been having, and specifically kind of what your perspectives are around all of that for the future and how people are implementing technology and the role that data plays.
Yeah, I'd love to talk about that, Joy. In fact, we got a couple, I think, slides to back up the points. Well, let me start with one thing for sure, and that is, I talk about this all the time, but it's interesting when we're in market conditions like this, it becomes a more relevant conversation, doesn't it? So when things are going really well, people tend to get lackadaisical about operationalizing, I call the data, but this isn't an acceptable sort of management strategy going into certainly into 2026, given where we are. So data absolutely is an asset and should be utilized. It's just sitting there, it's doing nothing. And I think what I'm seeing across our customer base is they're all on these digital roadmaps. Mm-hmm. So if you look at this slide, what's a digital roadmap? What's a digital strategy? Taking all the information and being able to consolidate it in one place. Okay. So digital information could be how your customers are buying. It could be your inventory strategy, your network, your modality, your inbound freight, your outbound freight. All those things are important. What Trax provides is the absolute cost of transportation down to the charge level, which is a huge aspect of this little graph there you see on the left side. Mm-hmm. Which has a bunch of lines on it that says there's a lot of data points being captured within a typical supply chain, both inbound and outbound to consumer. And this also gets pretty complicated when you're doing that commerce globally, right? So you have nuances that are taking place with global commerce around transportation and supply chain. So the key is first data consolidation and normalization into a single data asset that can be leveraged for several use cases. So if you go to the next slide, it's a use case strategy, but it starts with knowing where you are in the maturity cycle. Mm-hmm. So one of the things, Joy, I've been looking at across customers is, and I don't typically, sometimes I get asked this, but a lot of times I don't even need to go in and say, well, you're here, or where are we? It's sort of a self-diagnostic tool here to say, well, read the chart and figure out where you are. Mm-hmm. Most people are in the middle somewhere. They're not on the far right yet. And why are they not there yet? Because to be on the far right, there's two key things about being on that far right, which is the most mature phase that at least from my perspective, exists today. And that is two things. Proper utilization of AI to accelerate the interpretation and understanding of data. And two is the operationalization, or I call that, I make up a word, but really what I'm trying to say there is it should be fundamental to the management of the business. Okay. It's not a nice to have. It's not, I'll go look when I have time. It is a fundamental aspect of running the business. So I'm not going to read the whole chart. Mm-hmm. We can share it out, but I think the key here is look and determine where you are. Maintaining is a failure in today's market because you can't compete. If you're optimizing, you got a shot, and if you're leading, that's where you want to be. And again, that means that you can ask the hard questions and you can get the answers in a reasonable amount of time. If it takes too long to get the answer, then what good is it asking the question? So a hard question like, why is my cost per unit weight up in general? That's a hard question. It's not a simple question. And more so, can you give me the breakdown of why it's up? Is it all fuel, or how much of it is fuel? Well, if it's not fuel, what if it's a combination of things? This is where those kind of questions are harder questions. They're not simple AI questions. And so AI becomes a tool that can be used to help accelerate getting those answers. Then you have to have proper vetting and understanding of the data and learning around that to really create a good answer from it. So those are the key things about the maturity phases. But you really want to be on that right side to be competitive in today's market. And again, these market conditions demand you have that level of aptitude in the company to operate in the conditions we're in. And then I think the last slide is just is to drive it by use case. Mm-hmm. So strategies aren't general abstract things. They typically go down a series of use cases. And then how you prioritize these use cases ought to be done by measuring the opportunity within each one. Everyone has a different opportunity in terms of level of effort and outcome. So you see procurement there has quite a long list. And I put it at the forefront because to me, if I'm in procurement today, boy, I have a tough job. I'm negotiating contracts in a market where rates are going up, capacity is down, partners are consolidating, tariffs are in place, fuel is at a record high level for the trailing maybe 6 to 12 months, and probably further back than that. It's a tough job.
Yeah.
And if you don't have the data and the tools, including AI assist accelerants, to navigate, it's a tough road right now. So you should look at these use cases, and I put them in categories by functional owner in the company, right? So procurement, finance, logistics, ops, and they all need to work together because each team is managing a set of functions within the execution of the supply chain, and they're vitally important, and they need to work together. So they should be sharing the metrics out and understanding the impact of making decisions, looking at that data on a frequent basis, and making the right decision and looking at the outcome to make sure it properly was executed. I put ESG there on the end. ESG isn't going to, maybe a little bit less important in these market conditions, but I still feel it's important. So looking at carbon, looking at your scope 3 impacts, reducing unnecessary waste, and scorecarding your carriers are all really important. Any partner, suppliers, carriers, it doesn't matter, because it is an ecosystem. So you have to continue to monitor those things as well. But everything is driven by use case. And so when you look at your strategy and you understand where you are in that graph of maturity, when you start really digging into the layer below, you ought to pick the top use cases you want to solve for, and you want to master those use cases, and then make it fundamentally baked into the business operating procedure, and make it easy to do, and do it at the frequency that's healthy to maintain an optimal set of execution strategies. Okay. So again, leveraging data is critical, and having the data is step one. Understanding it all is step two, and then accelerating the ability to understand it is step three. So really, that's, these conditions drive the need for that, and that's where we are today.
That's awesome. I think it's so salient that you focused as much as you did on the use cases. I don't know if you know, OpenAI just invested $4 billion in hiring consultants to implement AI in enterprise environments, because it's the hardest part, right? The hardest part is the actual implementation. And so the use case is so relevant. Yeah.
Well, if you look on, in just one additional point you reminded me of, when I talk about level of effort, so you notice on here, there's network optimization under logistics ops, and then under procurement, I have a contract optimization use case.
Yeah.
Now, think about the level of effort to optimize your network, or move a DC, or put in a new DC, or something like that. You're talking about a major investment of time and capital to do that. Optimizing your contracts with your carriers, good negotiation, good data, good strategy, bears tremendous savings opportunity there. My point is, you got to look at the use case. And I'm not saying you don't do both. I'm saying that one has a very large return, potentially with very much less effort and capital outlay. So you got to look at all those things when you're putting your business cases together and you're prioritizing.
Yeah.
Okay.
Fantastic. Awesome. All right. Well, this was jam-packed. Lots of value, lots of good takeaways. I appreciate all of this. We're going to drop a link. So there will be a link to subscribe to the monthly freight market report. Obviously, you'll get all this and more. So the full report with all of Steve's commentary on all the trends that we're observing, all the things that are happening. And the next one will be out in probably about 3 or 4 weeks. So the May report will be coming out after this month closes and the LMI is published and all of that. So definitely make sure you get on that list so that comes into your inbox. And Steve, we're grateful that you were here, especially after you had a long and busy week on the road. And we appreciate your time as always.
Maybe I'll get a full night's rest tonight. We'll see.
Yeah, here's hoping. All right. All right. We'll see you next month.
Billy.
Thanks, Steve.
Okay.
All right. Bye.